These dividend stocks have posted significant price declines over the past year, and they are recovering from the fourth quarter plunge. The upside for any investor considering putting new money to work in these dividend stocks, they are close to multi-year lows and have strong yields. So let's take a look. The first company here is Nucor, a major steel products producer and recycler, operating 25 scrap-based steel mills, representing annual production capacity of 27 million tons. Nucor has a market value of $18.1 billion, a dividend yield of 2.7%, and a 52-week price decline of about 12.6%. Nucor's growth strategy focuses on lowering production costs, building dominant market shares, and moving up the value chain. The company has achieved steady reductions in per ton conversion costs since 2015 and has also built the leading North American market share in structural steel and the numbers 2 and 3 positions in plate and sheet steel. Progression will result from introducing new high-strength steels for automotive applications, novel products based on quench and self-tempering technology, and hollow structural sections in electric conduit. Nucor set records in revenues, profits, and steel shipments last year, with sales topping the $25 billion mark. The company says 2019, from an earnings standpoint, will be one of the best in Nucor's history. Nucor has grown dividends 45 years in a row, although growth has averaged less than 2% per year over the last 5 years. Still, the company has returned more than $8.5 billion to shareholders through dividends and share repurchases since 2006. So let's go to the chart. We're looking at the 20-year monthly chart on Nucor Corp, and the symbol is NUE. For disclosure purposes, I do not hold any shares of Nucor at this time. And looking at the chart here, what strikes me is the bottom there in 2009, and then a very nice upward trend since then, actually within that channel there. Moving on down to the MAC, we see pretty much the same thing. The bottom there in 2009 with a decent uptrend. Of course, my lines aren't straight, but you get the idea. And that channel there. So I would be looking for the fast line to bottom someplace here, hopefully above that midline or zero line, and then head back up. I think it has a fair chance of doing that, but you'll have to watch it. Here in the histogram, we see an attempt at a bottoming process. Not quite sure yet. I think it's got a few more months before it gets to that zero, and then the fast line crosses over that slow line. So watch for that. Price rate of change, a very slight decline here. We're still right at the zero line, so there's a fair amount of strength in the stock. Hopefully it can do some sort of basing here and recover and head up. Relative strength, looks like we hit that bottom there. We have an upward trend, so hopefully it can continue that upward trend. As long as this move down here turns and heads above the 50, it'll be in good shape. But still, watch that. Into the stochastics, looks decent. Again, upward trend. Looks like we have an attempt at a basing. This fast line looks like it might reflect down. Hopefully it'll turn and head back up over that 50 line. Here into the volume, can't say too much from that, looks fine. And then the Williams, we had that bottom here. Now this last sawtooth move is coming on down. We'll have to see how far down that goes. But I think it has a fair chance of ending somewhere above this level here. And if it ends and then moves back on up, you might have a stock for strong consideration. Back up to the chart. Again, I like that channel. So it's something to watch here in the near future within the next few months to see what happens. As well, follow the fundamentals. Do your fundamental analysis. Let's go to the second stock. And the second stock is global conglomerate 3M, which generates $32 billion in annual sales, operates in 70 countries, and ranks 97th on the Fortune 500 list. The company is known for innovative products such as Scotch tape and Post-it notes. 3M makes adhesives, abrasives, laminates, window film, personal protection equipment, and many other products for the industrial, consumer, healthcare, and workers' safety markets. The market value is $115.8 billion. The dividend yield is 2.7%, and the 52-week price decline is about 22.2%. On the M&A front, 3M is paying $1 billion for M-Modal, a leading healthcare provider of cloud-based AI systems that will help 3M tap the electronic health records market. 3M targets annual 3% to 5% organic sales gains and 8% to 11% earnings per share growth over the next 5 years. 3M recorded its 60th consecutive year of dividend growth in 2018 and hiked payments by 16% last year. The 5-year dividend growth has averaged 16.5% per year, and the payout ratio ranges around 50%. Rising material costs and foreign exchange headwinds caused 3M to trim 2018 guidance, and the company recently scaled back its 2019 outlook as well. However, big declines in the stock have driven 3M's yield to 2.7%. So let's go to the charts. This is the 20-year monthly chart on 3M Company, and the symbol is MMM. For disclosure purposes, I do not hold any shares of 3M at this time. Similar to the previous chart, we have a bottom here in 2009 and then a very healthy run from that point to the current level here. We had the top above 250, we had the decline, and it looks like it's doing a nice basing here in this level here, currently $200.89. Moving to the MACD. MACD is still moving on down, at least from this chart here. We'll see in the histogram that things are improving, but both the fast line and the slow line are continuing to drop, but that's all right. We're above zero, so there is still some strength in the stock. Moving here into the histogram, you can see that we are basing here, and the histogram is moving on up. We have a few more months, probably, I'd say maybe 3-4 months or so before one would be convinced to buy, if you check the fundamentals. Moving here to the price rate of change, we have that plunge here in the fast line from late 2018 into early 2019. This is as severe as it was back in 2009. So that's kind of interesting. So look for a bottom to occur here relatively soon, in my humble opinion. RSI does not look all that bad. A basing here, and we have a nice upward trend. So there's a divergence between this oscillator and the price rate of change that we looked at earlier. So that's somewhat interesting too in my mind. Stochastics looks fine. Basing here with the fast line moving through the slow line. Hopefully it can stay up there. Not too dissimilar to that there. And this is a bit odd with its run and several sawtooths here. Don't know what's going to happen here, but it does look promising with the fast line moving through the slow line. Volume looks fine, and the Williams looks okay too, with that bottom here and nice strong upward trend. The Williams, also shows a divergence between that and the price rate of change. So I tend to think that that price rate of change is giving us a false indicator. Everything else looks interesting. MACD is still moving on down, but as I said, there's strength in this thing over zero. Watch for that to base, bottom, and then move up through the slow line at some point in the future. And it's going to be a few months, so you'll have time on 3M. But as usual, conduct your fundamental analysis. And so for today, that's ChewDog Charts. Thank you.